Today, we're diving deep into one of the biggest stock market stories of the week, FMC Corporation. As you can see from this chart, FMC has plummeted by over 30% today. That's an absolutely massive move for any stock, especially for a company like FMC, which is a key player in industries like agriculture and lithium production. A drop of this magnitude is certainly alarming, and while it's easy to panic when you see such a sharp decline, it's important to take a step back and analyze what's really going on. In this video, we'll break down the reasons behind this crash, examine the broader challenges facing FMC, and discuss what it all means for investors moving forward. But before we get into the details, let me make one thing crystal clear. This is not financial advice, and nothing in this video should be considered a buy or sell recommendation. Always do your own research and consult with a financial advisor before making any investment decisions. With that said, let's dive in. To fully grasp why FMC's stock has taken such a hit, we first need to understand who they are and what they do. FMC Corporation, headquartered in Philadelphia, Pennsylvania, is a global leader in agricultural sciences and lithium production. The company operates in two main segments, agricultural solutions and lithium. On the agricultural side, FMC produces crop protection products like herbicides, insecticides, and fungicides, which help farmers protect their crops and increase yields. These products are essential for modern agriculture, especially as the global population continues to grow and demand for food rises. On the lithium side, FMC has a significant presence in the lithium market, which is critical for the production of electric vehicle EV batteries. Lithium is often referred to as white gold because of its importance in the transition to renewable energy and EV adoption. FMC has been around since 1883, so it's not exactly a startup. It's a well-established company with a long history. However, even giants can stumble, and that's exactly what seems to have happened here. While FMC has traditionally been a stable and reliable player in these industries, recent developments have raised serious concerns about its future prospects. The primary trigger for the massive sell-off appears to be FMC's quarterly earnings report, which revealed significant challenges for the company. Let's break it down. FMC reported fourth quarter revenue of $1.22 billion, which marked a 7% increase compared to the same period in the prior year. However, this growth was driven primarily by volume gains and masked underlying issues such as foreign exchange headwinds and pricing pressures. On an organic basis, revenue grew by 12%, but this still fell short of expectations in some areas. More concerning was the company's guidance for the upcoming quarters. FMC lowered its revenue and profit outlook for the next year, citing weaker than expected demand in key markets, particularly in agriculture. The market's reaction was swift and severe. Institutional investors likely sold shares en masse, triggering stop-loss orders and exacerbating the decline. This created a snowball effect, leading to a sharp drop in the stock price. A decline of over 30% in a single day is undeniably severe. And while some might argue that the market overreacted, it's hard to ignore the fact that FMC's fundamentals appear to be under pressure. The combination of lower pricing, currency headwinds, and cautious customer behavior has raised questions about the company's ability to sustain growth in the near term. While the earnings miss and guidance cut are the immediate triggers, there are broader industry-specific challenges that contributed to FMC's struggles. Let's take a closer look. In the agricultural sector, FMC has faced several headwinds recently. Commodity prices for key crops like corn, soybeans, and wheat have been volatile, affecting farmers' incomes and their ability to spend on premium crop protection products. Extreme weather events, such as droughts and floods, have also impacted crop yields in major markets like North America and Europe. Additionally, governments worldwide are tightening regulations on pesticides and other agrochemicals due to environmental concerns. This increases compliance costs and limits product availability. During the earnings call, FMC's CEO addressed the challenges and outlined steps the company plans to take to navigate this difficult period. One of the key announcements was a focus on cost-cutting measures. Management plans to streamline operations and reduce costs across the board, including optimizing manufacturing processes and cutting non-essential expenses. Additionally, FMC emphasized its commitment to expanding in high-growth regions like Latin America and Asia, where demand for agricultural products remains robust despite global headwinds. Another important point was the company's ongoing investments in R&D to develop next-generation crop protection products and sustainable solutions. Innovation will be critical to staying competitive in a rapidly changing market. While these initiatives sound promising, execution will be key. Investors will be watching closely to see if FMC can deliver on its promises. It's worth noting that management's tone during the earnings call was cautious, but not overly pessimistic. They acknowledged the challenges, but also expressed confidence in the company's ability to overcome them. Whether that confidence is justified remains to be seen. So, what does all this mean for investors? For short-term traders, FMC could present opportunities to profit from volatility. But given the bearish sentiment, risk management is crucial. Long-term investors, on the other hand, need to carefully reassess their thesis on FMC. Ask yourself, are the current challenges temporary, or do they reflect structural issues? Does the valuation offer enough margin of safety? And for dividend investors, FMC pays a modest dividend, but with the stock under pressure, the payout ratio could come under scrutiny. Ensure the dividend is sustainable before committing capital. It's also important to remember that a 30% drop in a single day is extreme. And while it might feel like a bargain, it's essential to look beyond the price and focus on the underlying fundamentals. At the end of the day, investing is about managing risk and reward. And FMC's recent performance highlights the importance of doing your homework. To wrap things up, FMC's dramatic drop today highlights the importance of staying informed and understanding the underlying drivers of stock movements. While the company faces significant challenges, it's too early to write it off completely. The agricultural and lithium markets remain vital to global growth, and FMC has the resources and expertise to weather this storm if management executes effectively. As always, do your own research and consult with a financial advisor before making any investment decisions. Thanks for watching, and I hope you found this analysis helpful. If you did, give the video a thumbs up and share it with your friends. Don't forget to subscribe for more in-depth market insights, and I'll see you in the next one. Take care.